Hello, everyone. Hopefully, we've got everyone online who was interested to join. I know several people who registered were not available for the session itself, but will come later to watch the recording. So I appreciate everyone joining. We are going to discuss today how IT and AI can drive enterprise value, how investments in these things not only help with day-to-day stability, day-to-day operations, but actually return on the investment on the value of the enterprise itself. So a very exciting topic, one that in our practice at Innovation Vista, we spend quite a bit of time thinking about and collaborating with our clients about. Our agenda for the call will be, I think, fairly straightforward. We're going to try to quickly introduce Innovation Vista, not as a commercial for our services. I want this to be, value add and some interesting food for thought for you. But I do want to at least give a context of, what is it that we do and who is it that we work with, so that you'll understand, where we're coming from, where these findings and these project experiences will have been seen, and what sort of industries and clientele we work with. We'll go from there into just understanding an impact of how technology can drive first efficiencies, then revenue, and then finally enterprise value. Those things are similar, obviously a little different. So we take them one at a time in turn and look at how technology, particularly IT and AI in 2025 here, can improve these things, can drive increases in these things far beyond the actual cost of the technology implementations. We will go through a few samples from our project experience at Innovation Vista, looking at things we've done to help drive efficiency. Just a sampling, really. That topic could be its own thing, its own webinar. Same with revenue. We're up over $1 billion each on total impact for our clientele since we were founded in 2019 on both of those categories. So obviously, we'll take a sampling and really just sort of food for thought on the kinds of things that people can do, the kinds of things now that are within reach for even mid-sized companies to implement in terms of these improvements. We will look then at the subject line of this webinar, the impact of technology on enterprise value. So what does this mean? We've improved efficiency, we've improved revenue. What does it mean for what you're going to hear if you were to go to a PE firm or another enterprise looking to acquire your company? What happens before and after these kind of technology investments? We'll have a Q&A session, and then we have the commercial, if you will, about Innovation Vista. We do, certainly for people who are interested to know a little bit about our unique approach on these kinds of projects, we do want to give you that opportunity, but we want it to be at the end. And those of you that really joined this webinar to get the ideas, we want you to be able to do that more efficiently and then jump off the call. And we are always ready to field an incoming message or call or email if you want to speak with Innovation Vista, but that is an optional part of the day today. All right, so Innovation Vista, who are we? We are an IT strategy consulting firm that provides C-level IT consultants, former CIOs, CTOs, CISOs, etc., to mid-sized clientele across every industry on a contract basis. We have a core service called CIO IQ. I'll talk more about it later. But the main idea with CIO IQ is to make these experts affordable on a fractional basis, an advisory basis, if you will. So they engage with clients. It's usually one recurring call every week and then some research in between where our consultant brings their expertise to the table. When it's budget time, they work on budgets. When it's time for a new vendor contract, they help negotiate the contract. When it's time to hire or fire a vendor or staff person, they get involved to help with those key decisions. Beyond that, you see the circle of services around that. We do offer really everything up to full-time interim CIO services and fractional, virtual, special project leadership, etc. We have over 450 consultants. That's really the key to our depth and breadth, being able to cover all of the industries that we cover and having a fantastic choice for every client that we can handpick for them. Most clients are interested in the industry experience, so that breadth really helps. Some say to us, look, our industry is actually behind the times. We would love to get insights from some other vertical that maybe it's a little bit similar, but more tech forward. So we're fine with all of that, whatever makes the most sense for the client's vision. We have, at this point, our consultants have advised over 750 C-suites and boards. And as I mentioned, we're over $1 billion each in measured tech-driven incremental revenue and cost savings through efficiencies. So this is what we do. We don't do support. We don't do hosting. We don't do custom software development. We are in the business of strategic IT guidance, and particularly at that C-level, C-suite advisory, board of directors, or all the way to virtual and interim CIO. Okay. All right. So a little bit about how efficiencies work. This is remedial for most people on the call, I'm sure. I think we have almost all C-suite participants on this webinar. So I appreciate you joining, and I know you are among the busiest people in the world. So your time is valuable, and I'm hoping to make it worthwhile here. The idea with a traditional kind of efficiency-focused project is to reduce, generally it's G&A. It sometimes can be the cost of goods sold, but generally you're reducing G&A, overhead expense, office expense, things of that nature with technology capabilities, systems, automations, etc. You're doing the same thing as an organization, but you're doing it for cheaper. And as a result of that, as I show here, the IT budget does increase usually, but the margin usually increases more than that increase to the IT budget, thereby driving the ROI. This is kind of the picture of a traditional IT project. I don't want to skip by this because revenue is maybe a little more powerful in the multiple and the enterprise value impact. But efficiencies are still there, and technologies have advanced now to the point where things that used to be very, very difficult, particularly automations, that if it didn't follow a very simple set of rules, in the past, it was very difficult to automate that. And that's why we have, rows and rows of cubicles of staff people performing certain functions, because their human judgment was important for some aspect of that process. That is changing. I would think with AI, that's changing. Let me pull up the list of example efficiency levers that we see. The left-hand side, there's a lot of automation listed. This is, again, just a sampling of the kinds of things that we bring to the table, the kinds of things that our consultant will identify in collaborating with your senior leadership team as potential ways to take costs out of the enterprise, if you will. And yeah, the power is definitely more than what it was even just 3 years, 5 years ago, because AI now can be layered into these things. So invoice and accounts payable automation, you can imagine the sort of exception processing. In the past, it would handle certain transactions that fell within kind of a safe zone. Everything else was escalated to an accounts payable analyst or accountant or controller, depending on a dollar level, usually some kind of criteria like that. And they handled a certain part of it still manually because the dollar amounts were larger. Now we are getting to a point where the transactions can all be put through if the rules can be written down. That can be a lot more complex than it was in the past. And the human element of the approval of these workflows is a lot smarter than it used to be because of AI. So the escalation doesn't need to be just above $100,000 expense. It needs to go to the controller for approval. It can be things like if it's above $100,000 and there's no previous record or pattern of activity with a vendor, there's no known PO with a vendor that sort of indicates we're expecting this expense. Things like that can be looked at now by AI to really just give the human beings the exceptions to the rule, which is what they're best at handling. So there's a few examples here. On the right-hand side of this page, you'll see some examples that really aren't about automation. Some of these, the collaboration and knowledge platform, for example, there are so many documents and unstructured data, we call it in the technology field. So much of what enterprises understand and do ends up in that form. And the new AI tools that are on the market now, really off the shelf. You can buy a tool that helps you get your arms around what have we as an enterprise put together for this counterparty, or what documents exist that reference this kind of topic. And it really can kind of unify the enterprise's knowledge in really powerful ways. So that's one we love. Seen a lot of power from that. Of course, cloud migration is still on the list. There are the obvious things which we were talking about 10 or 15 years ago as an industry, the scalable infrastructure, things of that nature. The other thing I would point to about cloud migration that is becoming really powerful is the automated administration capabilities. So the hyperscalers, the AWS, the Azures of the world, GCP even for Google, they are working. Some have released limited tool sets already, and they are all working overtime on this idea that you don't need system administration skill sets to administer cloud infrastructure, that it knows enough about what you're trying to run, what the performance of those things is, and with some instruction from the client, it can actually administer those platforms by itself. So we are about to enter a phase of real disruption. That's an IT savings, obviously, but a lot of that esoteric knowledge that you used to have to hire or contract with an IT services vendor, so you would have someone who knew, really the details under the hood of how things worked, in case you need to upgrade, in case you need to migrate, in case you, God forbid, you run into some kind of a problem and you need someone to diagnose what's happening. That need and the role of human experts in IT is sadly for many somewhat melting away with these cloud administration tools coming on the market. Really, each of these could be its own webinar, but you see kind of the wide variety here of, it's everything from automating what human staff performs to some of the behind the scenes work in IT. and doing things like putting the knowledge of the enterprise at the fingertips of the employees. All right, so that's efficiencies. Now we look for revenue. We take a lot of pride at Innovation Vista in finding revenue, whether it's accelerating and increasing existing business models, helping sales teams, or helping B2C, delivery and performance of sales programs. We also help create brand new revenue streams. And I'll give a few examples of that here in a moment. But this dynamic visually is showing kind of the combined impact. If you have efficiencies helping drop your COGS and G&A, and then you've got additional revenue from unique IT capabilities, maybe it just grows market share. Maybe we add some things that some of your competitors don't have, and it's still the same basic service, but now they have a customer portal that they can log into and see the status of their order if it's something fairly complex. Or maybe there's some predictive analytics in place where we offer them unique bundles of packaged services or goods that are in the right sort of combinations of what they need for their business. And we drive revenue as a result of that. However it happens, this dynamic is very powerful to say, okay, the margin is going up, again, significantly higher than what the IT budget increase was. That's the ROI that we deliver to margin, really, via efficiencies and revenue. Some examples of revenue, we do a lot around prospecting and lead scoring. Innovation Vista ourselves, you won't be surprised probably to hear that we are using IT-driven early funnel prospecting. It's identifying who to reach out to. It's tailoring what we say to each of those recipients. And so this is not just a segmentation exercise that's been around for decades. This is, if you will, micro-segmentation, where each and every recipient is getting a tailored message that the system knows who they are, what we've done with them in the past, even can look at what is recent for that organization in terms of news or press releases, right? Maybe some relevant topics raised in those kinds of announcements that we then can message and reach out to them about. We do next best sales action. So here's a list of prospects. Here's when we've last spoken to them. Here's, sort of the response that they've given and what actions they've taken. What does that mean for our sales team about what to do next? So much of salespeople's time is spent on triage like that, and freeing them up to just do what they do and build relationships and explain services and find ways to apply your company's solutions to your customers' needs. That's so much more value add versus trying to determine what to do next with each and every client. So the tools now, the AI especially, can really tee these things up and make them, extremely accessible for sales teams. Dynamic pricing it's again its own topic, but there's so much rocket science that can be done here now. Some airlines recently have gone public with their efforts on dynamic pricing, and they're seeing tremendous value. And, the truth is there are so many variables that factor into what value a good or service will have to the customer, as opposed to what did it cost you to produce or deliver. And that's really what dynamic pricing is all about, is trying to look at things from that other side of the dimension. Personalized customer journey, sales enablement. I don't want to read all of this. You can see the sort of swath of things, and hopefully envision in your mind some of these would apply to your organization, and some of these really would help revenue to increase if you had these and your competitors didn't. So that's again, key part of our process. So we've got efficiencies, we've got revenue. Now we move to what does that mean in terms of valuation? I've got a note here on the side. So generally we serve the mid-market, from 10 million up to $1 billion or so on revenue. Our largest client, I think, ever was $1.5 billion of revenue. So generally on the south side of that line, vast majority of private equity acquisitions in that sector are EBITDA multiple based. There are other ways. There's discounted cash flows. There are other models used for larger enterprises and publicly traded enterprises. We're focusing here on a multiple of EBITDA because that's what we see, and that's where our clients generally land if they're going to sell to a PE group. So in the starting point model, I guess, for our example here visually, we have a 7x multiple, right? We have the old margin before we make that increase. We've got a nice profitable business, right? They probably feel fairly good before realizing what technology could bring to the table. They're not struggling. They're not approaching bankruptcy, anything like that. They have a pretty solid profit margin. With the technology investments, we see the new margin, and we're thinking, okay, this is certainly helpful. Let me show you what this means in terms of enterprise value, the way that PE groups value companies that have unique technology capabilities. It's really the core of this webinar, and our message to clients on this topic is they see you differently when you have unique technology capabilities. Why is that? It's easier for you to scale. It's easier to predict outcomes. You are less at risk for disruption of having multiple people on a particular team resign from the company. If you are a very manual operation, that can kill your business or significantly impact it. If you have significant investments in automation, you've got AI, you have embedded the intelligence and the business rules into systems like that, you're less at risk of disruption from those kind of events. And scalability. You can do more without having to find particular special skill sets out on the recruiting market, for example. So all of those things, I think it's very sensible, and you could make the argument that PE firms really ought to pay more, and maybe the no tech advantages world will drop through time. It would not surprise me to think about, at least for a platform play. PE groups sometimes acquire companies for their Rolodex, and they've already got a platform company that's providing the same good or service, and it's really sort of a tuck-in to add customers to that same platform. But if you're the owner of an enterprise or a shareholder, you want to be the company that's acquired for the platform purpose, because that is how you get your full enterprise value, not just the value of your customer Rolodex. That's what's going to happen to companies that really don't have any tech to speak of, or to help them stand out or compete. So this is kind of what we see visually. The incremental enterprise value is more than the entire previous enterprise value of this company. It more than doubled in this example visually. And you see from this, again, that sort of narrow increment, and that includes the volume and licensing increases and that sort of thing. We see when new revenue comes in, it does increase the IT budget, but the increase to profits and the increase to enterprise value are so much higher. Just a remarkable difference. So I see some questions here. Yeah. Why wouldn't a company just take your roadmap ideas and run the projects themselves? That's a great question. You know, we're happy if they do, I guess is my answer. And let me unpack that. So, it makes zero sense for us to try to engage a company on a contract service where we're providing a consultant that is doing something that their internal IT leader can handle themselves, or some other leader. Um, we want to fill the gaps. We want to provide the insights that don't exist now. We want to provide this mindset of innovating beyond efficiency, looking for top line market share kinds of impact. If that turns into just a strategic roadmap, we have clients that's all they've needed and that's all they've asked for. Um, and that's completely fine. So I love that question because it lets me say that about our services. Obviously, there are more clients that it sort of goes hand in hand, I guess, that the same reason they haven't had this mindset in the building in the past about looking for technology investments that could potentially have these kind of impacts is because they don't have an IT leader that is thinking that way. That might be because they don't have an IT leader at all. A lot of mid-market companies are still dependent on IT service providers and MSPs. That's a very different kind of service. Some of them do offer like a virtual CIO kind of service where they help you set your budget and sort of take stock in what your technology platform is. I'll tell you, it's extremely problematic in our mind. And we see this dynamic a lot where the MSP, they have a conflict of interest. We call it the fox guarding the hen house. When you ask the company that is doing the IT support for your organization what you should do with technology, they are motivated to have as few changes as possible, to have to invest their people's time as little as possible. And really the change, I mean, change is risky, right? What's the safest thing that someone could do with technology is nothing. It's safe up until the point where it puts you out of business, right? If you're still running Windows 98, so some change is necessary. Some change is an unfortunate kind of side effect that comes part and parcel with innovation and forward movement. But MSPs are not wired to want those things. So we see that a lot. So, we're trying to stand out, obviously, as an independent advisor and provide these kinds of services. But I like this question. Thank you for asking. And then these are probably some of your best projects, which I understand. But how many of Innovation Vista's projects have failed? It's not zero. And no, anyone who tells you that it is wrong. I mentioned on the early slide, we've advised about 750 plus C-suites. It's around 1% where something happens. I'll not to throw organizations under the bus at all, but I'll tell you the primary cause when that does happen is there's some kind of fractures in the leadership support of what we're doing. Back on the topic of change, when change happens, there are sometimes speed bumps. There are sometimes, version 1.0 is not what it needs to be. And these kind of ROIs don't come until you get to version 1.2 or what have you. It's just the nature of complex innovation. There's no recipe book out there for very much of this leading edge stuff. And as a result of that, it's iterative. We have to improve it. But with leadership that buys in and understands the potential and understands again, look at the visual here of what are we trying for? We're trying for that incremental enterprise value. And we're trying to pay the price for that of this very thin little technology investment. That's what this is all about. And it's worth it. And so I would say 99% of our leadership teams fully understand that. Once they understand that, they become clients of ours. Some don't, and maybe for some, the timing isn't right or what have you, and they choose not to be clients of ours, and that's fine. But those that do, yeah, we need the leadership on board, and we need them to say to their organizations, hey, if we hit a speed bump, that's not the time for the skeptics to pile on and say, I told you so, this entire thing's going to fail because the staff doesn't want AI in the first place, because they're all worried they're going to lose their job, et cetera, et cetera. There really are a lot of human nature dynamics that come into play. And that is what kills digital transformation and leading edge innovation projects. So we have seen that. I'm sad to say we have the scars to prove it. I think what that means is we have seen enough of the patterns to beware of that. And that's part of what we're advising about, right? So if we detect that in a leadership team, if we detect, for example, that the CEO might be very much on board and he's our primary contact and he's signed the contract to, let's do this, let's figure out some strategic things. The CFO and the COO, if we detect they are not on board and that they're going to be, every little speed bump that might get hit, they're going to say, I told you so. And they're going to be against that. It could be a death shot to the project. So we raise that flag and we work through that with the client, and maybe we decide to go really small to prove the concept and win some hearts and minds before we jump in with larger investments. Nigel, past purchaser of AI and IT, always skeptical of how a company derives the product's ROI. Yes, rightly so. So the short answer is it's a negotiation, and it's such a big thing for Innovation Vista, and we have this scoreboard that we're posting, and we love keeping track of this. But we tell clients, look, for your own good, you need to know what truly is incremental. And what can you tag under the heading of, hey, this is from the project, this is from the technology, versus this is from the hard work that sales teams are putting in each and every day. That looks different in different organizations, but usually there is a way, if part of what you're doing is offering client service, like a client portal, let's use that example. If you've given a demo of that client portal as a part of the sales process, pretty much everyone involved will tell you whether it helped or hurt. It's usually possible to negotiate some kind of, hey, if that's a client that's been called on for 3 years and we finally make a sale because we did a demo, the client portal probably needs 75% or 100% of the credit. If that's a brand new customer that just walked in the door, they might have signed up anyway. That's fair. Let's give less of a credit. Let's give 33% or 25% of that incremental revenue, because honestly, the sales team might have landed them anyway, even without the customer portal. That's the kind of conversation that we need to have on these. So thank you, Nigel, for the question. Very good question. All right. I think I've caught us up on the questions for now. Let me move on here. So we've got a couple of examples. Before I do that, so EBITDA, it's not as simple on the dynamic, obviously, as just a multiple, right? There's all kinds of adjusters that PE groups look at for. They're not just going to pay 7x or 10x. It's okay, here's a baseline, and then we'll add to it for these factors, and we'll take away from it for those factors. That's how this goes. I think all of you probably understand that. Revenue growth rate is certainly a key piece of this. So anything we do which helps to win more also raises that revenue growth rate, because you are comparing it to previous periods of time when you did not have it. So just for that reason, technology-driven revenue is like bonus points on the revenue growth rate. Scalability, I think we soar here, right? And I used that example a minute ago of why a PE group would value a company higher if it was tech forward and had some unique capabilities. all those things. Key man risk is out. Key person risk, I should say, I guess. The consistency of delivery, the scalability of being able to do 5x, 10x, especially on a cloud infrastructure kind of platform, without breaking the machine, quote unquote, when manual processes are certainly at risk of that. Scalability honestly probably belongs at the top of this list. EBITDA margin and cash flow quality. Quality meaning, is it reliable, and are they getting their revenue from one great big customer, that kind of thing. Technology doesn't change all of that, obviously, but it can. If it helps you appeal to more people in your sector, then it helps on this, and it can become a plus. Certainly reliability, because we see retention raised almost every time when we add some new capability that makes the customer's life easier, makes it easier to do business with our organization. We keep our customers at a much higher rate than what we used to before we had those capabilities. So that alone, and then the non-concentration risk, what we love to see and typically see is market share penetration into people who have been doing business with the company's competitors. And that obviously is the pathway to getting out of concentration risk if you're suffering from that. Underwriting risk profile, I think advanced tech forward companies are placed in lower risk categories. Some of this is obvious. I want to say one thing that's not so obvious, and that is, and I've heard multiple people say this at ACG group meetings, things of that nature, where there are a lot of deal makers, and there are a lot of people with their ear to the ground on investment and dry powder versus deployment of capital. They will say to me, it's a great sign for the wisdom and the intelligence of the leadership if they have invested in technology, not just for its own sake, right? You need to have a strategy. Like, why have you done it, and what are you heading for? What is this future state that you're building one brick at a time? If you have that answered, you're giving the PE group the visibility of the inside of your brain, and they're going to like what they see. And so I've heard that multiple times, not just the measurables and all of that, but if you have your head down in the sand and say, well, look, we've been profitable since 2005, doing it the way we're doing it, there's no reason for us to change in 2025. That sends a certain message to a PE group that you're probably a sitting duck for disruption, because you're not going to see it coming, and you will be flat-footed. And it probably is coming to every industry. I think at this point, we're safe to say that it's already hitting every industry, and the level of disruption that's coming is much more than what we've seen up to now with AI and automation in particular. So all of that impacts the underwriting risk profile. Intangible assets, the last point here. This can be really neat, and there are some clients that have branded solutions that actually become their own line item on the valuation of the company. Why is that? Well, maybe they want to continue using the brand and they feel like it strengthens them. Maybe they want that system to be the platform on which they build more revenue. So in some cases, that system that started out serving your organization can have value for a PE group, maybe as a licensed solution across multiple, or maybe they have other portcos that are in the same sector that are going to also benefit, right? So it's the impact of having that is multiplied. So all of these things, again, just on the value adjustments, technology helps here as well. Okay, so here's case study number one. I don't want to read this whole thing to you, but I'll give you a few seconds to digest this. Basically, a mid-sized healthcare company that wanted to make a significant transformation. This is 6% of their revenue, 70% of their EBITDA. It's a big chunk of their winnings from a year, and that they set aside and said, we need to, and we want to. They were privately held and had conversations with PE groups, so they knew that they were going to be valued around 7x. And we went through this exercise, and you see the results. So 1.3 million invested, a little over a year. What happened? $20 million added to enterprise value. So how did that happen? Well, new patient registrations, retaining the patients that they already had, saving money. So they had a couple of internal jobs that they did not need due to the automation and simpler processes on the back office side of this. Revenue per provider. So the note-taking, leveraging AI note-taking, just one example for this, in a medical context, so much of a doctor or a nurse practitioner's time is spent recording what happened in the session, what they recommended, what tests, what do they make of the tests, like all of that. And they're having these conversations with patients, and then separately they're going in and putting those things into the record, because a lot of insurance companies need it, and because it's good practice, because when they go back to see that patient the next time, they want to have the context in hand. The AI efficiency of doing that for them into their EMR, just incredible. Just that alone enabled them to see 2 or 3 patients more per day, which, if you're in the healthcare space, you can imagine the kind of impact from that. So we had, all told, this was a $500,000 increase in EBITDA, all right, and a valuation that increased $20 million. So 1,500% ROI on this example. Just really, really powerful sort of win here. And Terry, to your point earlier, yes, these are some of our wins, right? So not every project ends up with 1,500% ROI, but some do, and almost all of them end up with many hundreds. We've got a whole page on our website that talks about our impact in sample cases like this. Okay, second case, smaller project. So the first one, it's an example of kind of a full transformation where it's, a sixth of their profits. They said, let's go do something and play offense with technology. That's big. This one is not that. This is 1.5% of revenue. It's 4% of EBITDA. So think of it as you don't have to go huge on these things. It can be really effective just to go, something like this. And let me show you what happens here. So we spent $2.2 million for this commercial real estate capital markets firm. Data enrichment, big part of it. We needed better data. So many people doing AI miss this step, or they want to do this step for cheaper than it really needs. I promise you, you are better off spending the money you need to spend. And that really depends on how good and how complete and accurate your data is to start with. Because if it starts really poorly, the data part of a project can actually be a larger dollar number than the AI part of a project. And a lot of executives get upset with us, or they're shocked by that, I guess. I thought we were doing AI. Everything I hear is about data. And so, we're explaining to them constantly on the planning side of this, it's going to be a lot of data, because we need that in order to have AI, even if it's just sort of a human in the loop, first draft AI result kind of system. You want the results to be accurate. You want it to have credibility. You need it to have credibility. Or what will happen? People will start disregarding it. people will say that model doesn't work. We tried it for a couple of weeks and it spit out garbage, and so we turned it off. Right? It just the complete worst possible outcome. So to avoid that, we spend time that we need on data. And on this project, it was $725,000. Not a small price tag, but important. The other thing I want to point out is the deal team adoption. That's 6 figures spent just on that. And I think it was wise, and there was a unique culture in this place that made it even more wise. But really, for anyone, if you are dropping in an AI solution that takes over part of what they do, or sits in the middle of their process where they put something into AI, they get something out the other side, you have to spend the time and the effort, and often that means the money, on explaining it to them, answering their questions, taking their feedback even when you design it. Staff level people have fantastic insights on little rules to make or little exceptions that normally that would be the case, but on this particular kind of transaction, this works differently than that. That kind of insight is worth its weight in gold to AI modeling. And the more they're involved, the more they understand what's coming along the way, the better they feel about it, the better it goes. And again, back to the leadership support, that idea that people, when they see the destination and they have kind of the picture painted of what are we doing and why and how are we going to get there, that helps so much with overcoming speed bumps in the early part of the journey, or even the middle part of the journey. Just speed bumps that they're not going to block you from success, but it's not like this kind of smooth recipe that you follow this and it comes out perfect. You have to iterate your way through. Okay, what's the impact from this? $50 million of enterprise value. Even a little small project like this, remarkable, and not that much change in multiple, honestly, but because of the sector they were in and because of the impact, like the actual revenue and efficiency gains, which were over $7 million a year, repeatable. I mean, this thing is a goose that lays golden eggs. And so that's an egg that comes out every single year. And by the way, with version 2, it's an even bigger egg, and there's more efficiencies and more revenue. So significantly powerful. The cultural shift is no small part. So embracing AI as a trusted partner, not a replacement of what they do. It elevated them from this kind of more tedious aspect of the job. Tedious in the sense of just going through the process, but still critical to get the right potential buyers for a piece of property in both directions. You want people on that list if they might be interested. You do not want people on that list at all if you know that they won't be interested. And those are obvious things to say, but honestly, with the manual process that we replaced, that was happening. Errors on both sides of that were impacting their results, and they really didn't even fully understand that until this easy button was put together. So that's another one we have documented on the site. Happy to discuss in more detail if anyone is interested. There's contact information here about us. Before we get into Innovation Vista, and we have a couple of slides at the end about how is it that we go into a company and work through these things, I wanted to offer this moment just to sort of close up with the slides I've covered, the idea behind this driving enterprise value, and hopefully to plant the seed of some ideas in your own mind about how your organization might go about this. Any other questions that we didn't already kind of address along the way? I appreciate the 3 that got put in there. Okay, well, ladies and gentlemen, thank you so much. I'm going to move on to talk about Innovation Vista in our practice. So we, as I said earlier, we are very focused and I think very unique in focusing on top line impact. We look for it. We understand in 2025, there are industries that are being reinvented left and right, and they're not just being automated to save a little bit of money. You can't grow yourself. You can't save yourself to growth, as they say. And so you grow yourself to growth, and technology can be a huge part of that. I think since COVID, customer expectations in general about how they interact with companies have done nothing but rise. And that if you don't have a way that on their cell phone, if they're out and about when they interact with you, you need a mobile app or you need a mobile friendly website where they can do what they need to do and they do not have to make their way back to their desktop computer in their office in order to make that order or do what they need to do. Just understanding that the bar has risen in these recent years. So that's a big part of why we were founded and a big part of what we do. We do start with efficiencies though. We look for ROI. Everything we do is ROI focused with an eye towards the trust and the strategy. We do want to keep the culture in place, but drive ROI within those lines as much as possible. That improves the performance of IT. We have some clients that come to us really literally feeling pain, crashes, breaches, waking up every day. One CEO last week said to me, I wake up every day wondering what's going to break. That's a horrible place to be. So we start with stabilizing IT. It has got to be reliable. It has to do what we need it to do to start with. And we start building credibility from there. But it makes zero sense to be working on innovative projects or integrating data or building AI or some fancy dashboard if the system's going to crash one day every week, right? So let's start with first things first. Then we move to optimize, where we're looking at architecture. We are looking at data, increasingly a huge theme on this topic, cybersecurity, integration, analytics. Are your systems talking together? Or, do you have interfaces or APIs in place? How do we make sure that when you run a number where the numbers ought to match, that they match? And how do we run a report that combines data from two different systems without some administrative assistant somewhere needing to open up Microsoft Excel and key in data from two different reports in order to deliver it? So there's so many things that encompass this before we get to monetizing. We do these other things and we make sure we have a solid base. Then we look for tech-driven revenue. Again, accelerated business models, new tech-enabled models, data products. One of the line items on that sample list of revenue impact, creating a product. Often it depends on your contracts. Okay. And been around that block multiple times. So let's talk. If you think you have data that might be interesting to Wall Street or to private equity investors, sometimes it has to be anonymized, sometimes it has to be aggregated, et cetera. But these people are hungry for data. They are hungry for anything that they believe gives them an advanced view or a clearer view of the market, and they are willing to pay for it. So, it's worth exploring whether your opportunity for a new revenue stream might involve data. And then, disruptive top line impact, right? So if you can deliver things your competitors can't do, or you can price things in a way because of efficiencies and automation that they are not going to be able to match. Either way, you begin to disrupt your space, and we love to see that, and we love to help make that happen. And we've used the analogy of a flywheel often, where we take the ROI of early projects that we fund with a client, And we ask for permission to plug some part of those winnings, maybe not the whole stack, but some part of that. Let's keep going. Let's find the next project. Let's find the next project. And if you do have skeptics on your board or in your leadership group, it can often be a really good solution for them to say, all right, let's put this amount of money to the side and let's see what they can do. And if it ends up growing, and then they can do a little more next time. If it ends up shrinking and you're right that, this technology isn't a great fit for us or whatever, it's only this limited exposure, that makes a lot of skeptics feel more comfortable. And we love that situation because we know we're going to find some things that will move that and enable us to grow that pot of money. And ultimately, what does that mean? The topic of this webinar, increasing your enterprise value. Increasing how it performs. That's on a month-to-month, quarter-to-quarter, year-by-year basis. And that means everyone else looking at your company will value it more highly. And the difference will be many multiples of the amount of money that you put in. I'll say a little asterisk, in nearly every case. Put it this way, you work with us, and one of the jobs of our consultant will be to find those situations and opportunities. If they don't find any, then we will share that. It will shock me. There are very few industries that aren't being touched at this point by technology pretty deeply. So unless you're already the absolute highest tech, most tech forward company in your space, we have things we can do, and those things will improve enterprise value. CIO IQ. So this is our flagship offering. This is our solution for the mid-market for companies that probably don't feel like they have the budget for a full-time CIO who's experienced. This service starts at $1,000 a week, under that actually, just under that. But $1,000 a week. So you're talking about less than the cost of an administrative assistant to bring on board a experienced C-level leader who has seen your industry, understands the business model, can walk in the door really ready to understand what's unique about you. They do not need to do stakeholder interviews just to understand where the costs come from and where the revenue and how does this industry work. That's the Big Four. That's the brand newly minted MBAs that they bring in by the busload. No, we work completely differently from that. We work with the idea that expertise is worth its weight in gold, and that if you can get 100% of that expertise for a fraction of the cost, you're going to win. And that's what we're here to do. So some distinctives about us: strategic focus on business impact. Hopefully that's come through loud and clear. Handpicked, proven leaders. We have over 400 consultants. So each and every client project that comes in, we are looking at a very big directory to determine who is it that would be the best fit for this. Independent expertise. We are not the fox guarding the hen house. Our consultants' sole job, sole responsibility is to give you the very best guidance, the very most strategic guidance they can about what makes sense for your organization, not just what's possible, but what makes sense from a business and ROI and cultural perspective in your competitive landscape, with your strategy being what it is, what really makes sense, and then having the expertise to get there and understand how to navigate those speed bumps along the way. And it's a flexible model. So our base service, again, under $1,000 a week. It just is an incredible leverage on that expertise for that kind of price tag there. So very often, as you would guess, the rest of the services kind of represented around this circle are requested, and we price those on a bespoke basis. So we know what you need by the time that we've interacted with you a little while. You know what you need, our consultant, and we collaborate together on a statement of work that makes sense for everyone and gets you to the next level. So CIOIQ.com. Happy to talk about that. Happy to talk about any of our services or anything I've talked about on this webinar offline. I know we are about at time here. We're a minute away, but I want to thank you all for joining. And we have one last opportunity probably to answer one question if there is any. I'm not seeing any in the chat now, but fire it in there if you have one, and I'll give you one last answer before having to sign off. Or maybe I've done a fantastic job of answering everyone's questions along the way. Thank you, James. I appreciate the comment. All right, everyone. Thank you again. We will post a recording of this back on the Luma platform and make this available for people who maybe are colleagues of yours that you want to share it with, etc. Happy to have you share this to anyone you think might benefit. Thank you very much.